The Dow Jones slides over 1,100 points or of over 3.5% following hawkish indications from the US Fed. The Indian equities slip in sympathy but seem more resilient ahead of the F&O expiry later today. Metals, financials and realty are the big drags.
The rupee sinks to a historic low of 85 to a dollar after a sharp rally in the greenback overnight on expectations of fewer cuts in 2025. The rupee had breached the 84 mark just 2 months ago.
Gold and silver prices also see sharp drops overnight as the dollar surges. Base metals too take a knock, with copper falling to a 3-month low and aluminum and zinc hitting lows for the month. No positive cues from China too add to the gloom.
Asian Paints sees 2 sales and marketing executives depart at one go immediately after their resignations. In an unusual development, the company replaces the senior personnel with internal candidates.
And SEBI has tightened the criteria for SME IPOs to safeguard the interest of investors. It has also set new turf rules for merchant bankers and expands the span of unpublished price-sensitive information to curb insider trading.
Good afternoon. You're watching us here on Halftime Report. The market's down this morning, but not particularly out. From lows, we've seen a bit of a recovery and almost 100 points. But as you can see on the top of your screen, gloom coming in from Wall Street overnight has percolated down to our markets as well. The only solace is that we've recovered from the lows and the broader markets are falling relatively less than what we've seen in the other parts of the market overall. So let's see what the second half holds for you, largely because it's also the weekly options expiry. I'm Manglam Malu. With me, as always, Hormaz Fatakia. Hormaz, what can one say? Down but not out would be meaning that, it's a big recovery that we've seen. We're down, but we haven't fallen much.
We haven't fallen much indeed, and that's the point, right? Because we have an all-important second half of the session coming in, and historical evidence is always proof that the second half has always been the more volatile one, especially when it comes to the weekly expiry or the day after the weekly expiry. So we'll see if there is any recovery that comes in from the lows during the second half of the trading session. But as Manglam highlighted, the broader markets are seeing a recovery that is a lot better than the benchmark indices. The mid-cap and the small-cap index now has around 65 stocks that are down in the red compared to at one point when there were almost 85 to 90 stocks that were trading with losses. Even the Nifty 500 index at one point had almost 420 stocks trading lower. They too are now down to around 350 stocks. So there is some recovery that is being seen in the broader markets, and it is also the rupee hitting a historic low today, but the IT stocks are not doing too well in today's session. The IT index continues to trade lower by 1.5%, but we are counting down to the end of the year. There is travel season, and of course, there is a lot of travel demand. So who better than a travel service provider to tell us more on that?
Take that point, and if you're traveling by train, then there may be some benefit coming for you as well. That's the focus of the conversation that we're going to have with the Travenews Tech, popularly known as Ixigo. They've launched a travel guarantee feature for train travelers, a new feature that provides 3x refund if a waitlisted ticket fails to confirm. Remember, 1x of the fare will be credited to the original payment mode and 2x will be refunded as a travel guarantee coupon for which you have to pay a nominal fee. Saurabh Devendra Singh, who's the group CFO of Ixigo, joins us to discuss this development and more so the general travel trends itself. Saurabh, this travel guarantee scheme that you've brought about, if you could give us some more details. What are the charges from this scheme and how much do you expect to garner from it? Because there's as good as an insurance premium that one is paying for the waitlisted ticket. If that isn't confirmed, then you give back coupons, etc. Just trying to understand the financial implications of this.
So, one, good morning. Thanks for this and thanks for talking about this as a product. But remember, it's not, if you see the product, it's not about, let me talk about the ideological reason of why the product was introduced. We as a company believe that people would be traveling across different modes as we go about. And if you see, the reason why we are giving 3x is that suppose you're trying to get your tickets booked, you're not getting it booked. We want to give you an option of flying on a flight or a bus using this. So it kind of helps you get to where you want to be. Say you've planned a holiday, you're on a waiting list, we'll ensure that you get to your destination one way or the other. So don't, as in, and like what we think about all our products, the first part of the product is trying to solve a customer problem. And in this case, the customer problem was that your vacation, in case you don't get a ticket, your vacation is spoiled. And our idea was we'll try and ensure that it's not spoiled. Commercially, this ticket type or this product, uh, again, remember it's something where we will be looking at the data, we'll be growing the product, but it's a forward-looking thing, so I won't be able to comment on how it affects me going on in the future. But largely, it's a convenience product, how we see it, and it's a product which is apt for this time when people have been. So take a case of Delhi Lucknow. You can reach Delhi Lucknow through all the three modes, and all the three modes are equally comparable and equally comfortable in traveling.
Saurabh, good afternoon. Thank you for joining in. Is there a financial implication of this? If you could elaborate more on that.
And there would be. It's a product, yeah, but guiding to the market on any kind of financial implication before I tell, as a public company, it would be. It won't be there. But look, what we always say is that for these ticket tribes, and let me help you out with kind of looking at the financial implication without being on the wrong side of telling any forward-looking information. Think of it this way, right? We as a company believe that Indians have a value bias. You give them value, they'll be willing to pay for that value. We believe this is a product where there is a need statement, it's out there, and it's a value that...
right. No, we get that point. We understand that Indians are value biased. We understand the offering, so to say, and the fact that, if the tickets are not confirmed, there is an option to go ahead and book a flight as well. But what I'm trying to understand is the business implication of the same for you. From a customer standpoint, what is this nominal charge that you are going to ask of them for a ticket of, say, 100 odd rupees? How much more does one have to pay? And what is the probability of that ticket getting confirmed, not getting confirmed? We're just trying to understand your working behind launching a product like this. And then if you're giving 2x the ticket price via coupons, that implies that you will be giving them discounts for whatever bookings that they're making on the flights as well. So all of that would cost you some sort of money, for which you will probably get a bit of a nominal charge. What we're trying to understand is how much do you, in your model, expected it to cost you?
So the first thing is, on any kind of pricing, remember all our pricing are done by our data models, which is personalized for customers, where we always reward loyalty and routes. And we have an idea of routes and what is the probability of the ticket getting confirmed for that particular route, which is there. So let's look at it mathematically. What are the different variables involved in any product like such? There is a element of attach rate. There is element of the cost, which is being charged. The cost is, so there'll be 5 people in a room. The cost will be different for 5 people in a room, depending on the model is pricing that cost. And then there is a cost of the probability of things not actually confirming. And then there is what you're paying. So it's 4 variables which are there in this. There is 1 revenue variable and 3 variables which contribute to the cost. So net, it will be a formula-based output. What you have to realize is the pricing, because it's dynamic, because it's being done by our AI/data model, will be a dynamic for people, for routes, for the probabilities which we believe are there to confirm.
Saurabh, getting on to some numbers now, if you could fill us in with some details. How has the quarter been so far? We are coming to the end of the third quarter. We are starting off on the holiday season, midway through it. How has the quarter been? How have bookings turned out so far? What is your target for the end of the year, if you could share some of those details?
So again, forward-looking, I'll try and help you out with more qualitative ideas on this rather than going on numbers. So again, think of it this way. If you ask me, do we see what we talked about and what we have quite openly talked about as what we see as growth and where we see us growing? we see strong growth across all our verticals are growing well. And it fits in with what we see as a long-term plan of growth. Uh, has anything been worth highlighting? I think what is being worth highlighting probably would be our international flight growth continues to grow very strongly. Domestic also does, but international for me is something that if you'd asked me about 3 years ago whether we expected international to grow and evolve this way, it's done far better. So yes, we are we are happy with the quarter, if I would say that, and on the long run, it fits in with what we've been talking about over the next 2-3 years on how our growth should look.
All right, we take that point, but we'll leave you with the promise to join us after your third quarter numbers so that you can give us more details into how the quarter was, along with some sort of outlook into what the business is likely to do as well in the middle of the quarter. I understand you are bound by not wanting to give any sort of forward-looking guidance, but I don't think that would put you in any sort of regulatory risk in any case. So, we're happy to hear your qualitative comments.
As a young company, yes. I'm probably erring on, as in I always have this phrase
on the side of caution. We understand that.
On the side of caution, or Jesus, or Caesar's wife has to be above suspicion. So if anything, I think as a public company, I'm Caesar's wife, so I have to be above suspicion on any case. So I'll err on the side of caution. Having said that, what I'm saying is, the great thing is, people in our world are wanting to travel. People are seeing travel as a great thing. And what I've been surprised by, people are doing a lot more spiritual travel. If I look at places like Varanasi and the growth in those areas, across modes that we are in, I'm seeing very, very healthy growth in spiritual travel.
We totally get that. And I mean, we don't need to look at people. We just need to, look at everyone around us itself for us to get that sense of anecdotal, jump in travel preferences. But we'll leave you on that note and speak to you after the third quarter numbers as well. Thanks a lot for joining in. With that, let's move on. Let's talk about the Growth Code, an initiative coming in with CNBC-TV18 and Grow, offers valuable insights and strategies to help you make well-informed investment decisions. This week, our colleague Nigel D'Souza sat down with Vishal Mehta, who's the CMT and founder Market Scanner, to understand why trading during low liquidity periods is risky. Let's listen in.
Why is trading, in a low liquidity market rather risky, especially in the F&O market?
Indian markets are the most liquid ones. Like Indian options market are considered to be the most traded contracts in the world. We have introduced next 45 stocks in the future segment. But liquidity is always when you are entering.
Yeah.
The problem is when you want to exit in a panic scenario, the liquidity dries up. So the more important part is you trade the liquid counters. And because I've seen in my personal experience, the stocks which were liquid, all of a sudden turn illiquid and you do not get proper exit. And in this scenario, the only thing that can save you in the derivatives market is a hedge position, because you know that this is the maximum loss that I'm going to incur.
Welcome back. The Nifty looking to crawl back towards that mark of 24,000, while most of the stocks are still in the red. A stock that is bucking the trend, though, is Dr. Reddy's, and that is on the back of bullish commentary that is coming in from Nomura. Vinny is here to fill us in with the details. Vinny.
Yes, so we have Nomura has actually upgraded Dr. Reddy's to a buy and given a target price of 1,500 rupees per share. What is keeping them so positive on the stock is that one, there was an underperformance that came in from the stock in this year than we saw coming in. That was mainly because there was a high contribution of a generic Revlimid drug, which is for most other companies as well. Now, what they believe is that this concern is already priced into the stock fall that we've seen in the recent times. They believe going forward that how the company has been shaping up in the last few years as well. They've stepped up their investment, especially in the biosimilar front in FY25. Around 2,500 crores is the investment that they've made and will be looking to make by the end of this year. So that is an important one, and biosimilars is something that could be a growth strategy for the company. Plus the GLP-1 opportunity, that is a big one, and that is not yet factored in completely. So that is something that will lead to the growth, and maybe that is why they've upgraded the stock, expecting a bit of an up move on this front.
All right, we take that point, but the stock under pressure today is Asian Paints. It's uncharacteristic of senior executives for Asian Paints to leave, and that too citing personal reasons with immediate effect, and that at a time when there is a fair amount of competition in the space itself. So just keeping an eye out on Asian Paints, largely because yesterday in the evening there were announcements to the stock exchange where Vishnu Goyal resigned as the AVP Retail Sales and Commercial, and also Shyam Swami resigned as the VP Home Improvement, Decor Services and Retail. Both of them citing personal reasons as cause for exit with immediate effect. Remember, very recently, last week itself, we had a commentary coming in from Birla Opus saying that, industry in the second quarter was impacted by consumer sentiment and competition from us itself. So at a time when things are heating up in the paint industry, senior leadership leaving from the incumbent or from the leader itself is something that the street is a little perturbed about, but nothing really to worry, largely because Asian Paints also immediately replaced these candidates with internal candidates. Ashish Ray, the current AVP Project Sales and AVP, has been replaced to be the AVP Retail Sales, Marketing and Commercial, and Mr. Gagandeep Singh Kalsi, who's the AVP Strategy Business Development, will also now handle Decor and Services. So those positions have been filled, but the reasons for their exit are still not known beyond the personal reasons, without any without any notice period. So we'll keep an eye out on where these gentlemen do go ahead after Asian Paints as well. On that note, we'll take a short break, come back. Aditya Agarwal of Invest for Edu will join in with some trading strategies. Stay with us.
Three, two, one. Hello, welcome to Young Turks Reloaded. I'm Shireen Bhan. Hi, thank you so much. What have been the big insights or the course corrections, the mistakes that you made at Upgrad that you would like to undo, redo with this one?
I always felt that India talent, there's a very large talent pool available. And I think if we do not tap into this talent, whatever we call as demographic dividend will end up being demographic disaster.
Do you believe that entrepreneurship is inherently a lonely journey?
I mean, absolutely it is, Shireen. And it's fair because, you're sort of, in some sense, already living in the future.
It is a lonely journey. You have your spouse, you have your partner, you have your co-founders, but in many cases, you end up being very lonely. You don't want to be seen as very weak. I've had instances where you are sitting in the office and then you rush to the loo, you have to throw up and then come back and you feel relieved.
You're watching us here on Halftime Report, perfect time to get you the market update at midday itself. I'm just looking at a couple of things which tell you that maybe we're in for a bit of an up move as we move towards the end of trade. Why do I say that? Because the Nifty's off lows, almost about 100 odd points. The Nifty Bank is just down by about 500 points. The mid-cap index is doing a lot better. If you look at a couple of other internals as well, and they come up for you, the Nifty day's low today is 23,870. The 200-day moving average, 23,816. Remember, it was just last Friday where going into 50 points with the 200-day moving average, the Nifty saw a big move itself. The other couple of factors that we're looking at, the India VIX is, coming down as well. The advanced decline, these lines are coming narrower with more stocks advancing and the number of stocks declining itself. The third part that we're looking at is the India VIX coming down. Remember, over the last couple of trading sessions, the India VIX moved to levels closer to that 15. And with the market seeing a recovery from the lows, the India VIX coming down is a positive. Why does that sound like a positive? Because one, we have seen put writing. So the put call ratio, which this morning was 0.54, has inched higher to 0.7, which implies that ahead of expiry, more puts are being written than calls, and that's exactly what is taking place as well. So the 24,000 call, which expires today, has a premium of 23. If the Nifty crosses that 24,000 mark and stays above that 24,023 mark, then all these call writers will have to run for covering their positions. Put writers have begun to unwind their positions already. Put buyers, they've made their money and they're out of the market here, 23,900. And we are seeing some action at the 23,950 put for a premium of 13 odd rupees, telling you that maybe 23,940 would be an important support to track. A bunch of stocks that I'm keeping an eye out on in today's trading session. A lot of long positions added on Dr. Reddy's, that Nomura upgrade has come by. A lot of short positions added in the IT space. One stock that stands out in particular is LTI Mindtree, and a couple of stocks which may exit F&O ban today. One of them is Nalco, the other one is Chambal Fertilizers. So keep an eye out on both of them. They may exit F&O ban today.
We'll definitely be hoping for some recovery, the bulls in the second half, and Mangalam has pointed to some data in that regard. Let's ask that to Aditya Agarwala of Invest for Edu, who's joining in. Aditya, good afternoon. Thank you for joining in. Do you anticipate a recovery in the second half? It's a weekly expiry known for extremes. Do you see another such sharp move on the upside in the second half? What's the data indicating for the index, and couple that up with your stock recommendations as well?
Hi, good afternoon, Good afternoon, Mangalam. Thanks for the show. I do believe that, and Mangalam has put all the points on the table, which points towards a short covering rally. I was closely monitoring the VIX, the India VIX, which actually hasn't moved up significantly despite the fact that the market has corrected. So that tells that there could be a short covering rally in the offering. Plus, if I flip the charts into a shorter term time frame, like an hourly or a 2-hourly time frame chart, it clearly shows a positive divergence building up on the hourly and 2-hourly time frame charts with respect to RSI. So that tells me that there is a bit of a short covering rally for sure. The first instance of a test of 200 DMA will held and is held, and then markets can see a recovery from here on. The question is till what levels the markets will recover. That is the biggest question. So I think 24,300 to 24,400 is the first resistance zone for the Nifty if we do see a good short covering rally in the market going ahead. And as far as Bank Nifty is concerned, I think 52,500 will be a major hurdle for the Bank Nifty to cross from here on. But yes, for the day, I think we could be in for a short covering rally. Not only today, Omas, I think today and tomorrow could be a couple of trading sessions where we could see a short covering rally. But I'm not too sure till what level this short covering rally will hold. Anyways, as we approach near to year end, volumes do decline and markets see very choppy and narrow band movement. So that is something that has to be monitored.
Totally take that point
talking
on
of
the
stock specific. Yeah.
Right, no,
Yeah,
we were taking that point on, the markets being choppy and moving in a narrow band. But at the same time, because of low liquidity, the impact cost also moves higher. So a little bit of short covering moves into a big up move, or a little bit of downtick moves into a big down move as well. As we were speaking, the stocks which were not doing very well this morning, we had the IT pack. And now we are seeing signs of recovery in the mid-cap end of things. So if you pull up something like a Coforge, that has seen a recovery of 5% from the lows, currently at the high point of trade. If you pull up something like Oracle as well, that too from the lows has seen a bit of a recovery. So the IT index by itself has seen a recovery in today's trading session, and led by mid-cap IT, Oracle and Coforge. You were talking about stocks. Aditya, go ahead.
Yes, I've got a couple of buy recommendations because I do feel that there could be a short covering rally. So I've picked up pharma stock within that short covering rally bucket list. Lupin is looking interesting to me. Mangalam has held its ground, a strong looking chart setup at current levels. I'll be buying in the stock for a target of 2,300 with a stop loss at 2,070 on the downside. The second stock is Tata Consumer. I think this is also one stock which has seen a lot of correction, and in the recent 2 or 3 days of correction, stock has actually not seen a lot of a correction. In fact, it's held its ground and seeing a lot of consolidation. So I see a good short covering rally coming into Tata Consumer from current levels. So for a target of 965, I'll be a buy here with a stop loss around 900 on the downside. Offers an excellent risk to reward as well, given it is entered into a consolidation phase. And yes, rightly pointed out by you, a lot of mid-cap IT stocks are seeing first signs of short covering rally. I think you can add one more name to it, Persistent Systems, Coforge, both and OFSS. All three stocks do look like there could be in for a short covering rally from here on.
All right, Aditya, thank you so much for joining in and sharing with us your views on the index and on specific stocks as well. As we slip into a short break, here's some good news for your viewers. India's business news leader is now just a click away. Introducing CNBC TV18's all-new app, and get instant access to breaking news, in-depth articles, and financial world updates at your fingertips. Download the CNBC TV18 app now from the Apple Store or the Google Play Store. Welcome back. Shifting focus now to the mutual fund space. Now, the funds raised via new fund offers or NFOs in 2024 till November stood at over 1 lakh crore rupees, which is 63% higher than 2023. Sonal Bhutra gives us a lowdown on the big NFO rush in 2024 and the categories which have been in focus.
2024 saw a lot of action in the mutual fund space, and funds raised via NFOs has definitely been one of them. Let's look at the numbers. Funds raised by NFOs or new fund offers stood at 1.04 lakh crores in 2024. This is still the month of November. And we have more NFOs in the month of December that has not been accounted for here. That is an uptick of 63% versus funds raised in 2023 at around 63,800 crore rupees. Now, this was slightly lower than 2022. That time, the number was 67,336 crore rupees. But 2021 also saw massive inflows. This was double the amount versus 2020, when the amount raised was around 53,700 crore rupees. Now, if we talk about the number of NFOs, 2022 still tops the list. So far in 2024, we've seen 205 NFOs which have been issued till November. This compares with 212 in 2023, 246 in 2022, 140 in 21, and around 81 in 2020. Some of the categories that saw high flows: multi-cap funds getting in 6,300 crore rupees of money, and other ETFs at around 1,400 crore rupees. But the real star of this year had to be sectoral funds. 40 sectoral or thematic funds have seen the highest flows that we have seen in the last 5 years. Sectoral funds garnered around 67,772 crore rupees in 2024 so far, which is more than the flows in this space from 2020 to 2023. In this period, sectoral funds garnered around 52,165 crore rupees. This is via 59 NFOs. Even index funds actually saw a lot of interest. 76 NFOs in the index fund space, raising 12,147 crore rupees, which is the highest that we have seen in at least 5 years. Index funds have always seen a lot of interest, and more so in the last 3 years, with more focus on passive investing. In 2023, 53 index funds were launched, garnering around 2,700 crore rupees. This compares with 85 in 2022, and these numbers were very low in 2021 and 2020, as you can see on your screen. Interestingly, no mid-cap funds were launched in 2023 and 2024. This space did see a big rally, but did not see a new product here, but saw massive flows in the existing names. Also, only one small-cap fund was launched in 2024. And now we are towards the end of 2024, and December also has seen a lot of action in the NFO space. But will this continue in 2025? Will there be new products by mutual funds houses to diversify their portfolio? Well, time will tell.
All right, interesting one. Sonal, thanks a lot for that. You can catch the detailed discussion on the big NFO rush today at Mutual Fund Corner at 2 p.m. only on CNBC TV18. With that, we take a short break, come back. On the other side, we get you markets and a lot of stock-specific action. Welcome back. The broader markets, we're seeing some, up move. Alembic Pharma, it's actually like a big up move that we're seeing in the entire pharma space. So if you pull up the pharmaceutical index, you would see there is a big recovery, and it's led by a bunch of names. During going into the break, we were just looking at Lupin, Hormaz was pointing that up. That stock has seen a big up move. Pharmaceutical index is at the high point of trade. Typically IT and pharma benefit from the weakness in the rupee. In the IT stocks, we didn't see that until now, because that also is impacted by the weakness in the US macros. But pharma no such problems. We are seeing a recovery out there. Along with, an up move on Lupin, we're seeing that on Ipca Labs, Biocon, and the others as well. And Dr. Reddy's, of course, has been among the top gainers in the pharmaceutical index since morning. What we'll do is take a short break, come back. On the other side, we speak about a bunch of commodities which are under pressure because of the strength in the US dollar overnight. Prabir Chatterjee, the Secretary General of Tea Association of India, joins in with Manisha Gupta.
Welcome back. Joining us now on the show is Prabir Bhattacharjee. He's Secretary General at Tea Association of India. Mr. Bhattacharjee, hi, thank you so much for joining us. And this has been one of those years where we have seen the tea prices also gain up in double digit. Also, when we look at the numbers until the month of September, the output clearly has been much lower. There's a lot of crop damage that has been reported. What has been your sense when you look at the overall crop situation for this year, the output that is?
Right. Thank you, Manisha, and good afternoon to you. It's always a pleasure to be with you. Actually, going straight to the production side, this year, we are having a production loss of around about 60 million kg as of now. Now, I must mention one particular fact over here. There has been a decision taken by the Tea Board and the Ministry of Commerce that there will be no plucking, beyond 30th of November. Now, when you take that into account, what actually we're seeing or visualizing is that there will be a crop loss of around about 120 million kg. Now, that's quite a huge, the downfall of the crop that is going to take place. Now, you will also appreciate that in the month of November, although it's a late season, what generally happens is that in the month of December, that is after 30th of November, if there is a closure, there is a loss of around about 7% of the crop, of the North India. So therefore, that tantamount to around 60 million kgs. So you have in the pipeline 60 million kgs drop lost in the production till October 2024. Add another 60 million kgs that's going to take place beyond because of the closure beyond 30th November. So add it up, it's going to become 120 million kgs downfall in the crop position this year.
Oh, wow, that's a big number, isn't it, Mr. Bhattacharjee? So what has it done to prices then? And we've already seen a huge run-up in this year. Are you looking at further gains? And I want to get your sense as well. How much of price rise have we seen in tea in this calendar year until now? What is your sense? And in the next 3 or 6 months, what is the kind of price rise we might anticipate?
Yes, Marisha, actually, to be very frank, there has been a price rise. Not that there has not been a price rise over there. But if you analyze it a little bit closely, what you're going to find is this, that if there are 50 sales that has taken place up till now, there was a price rise from sale number 15 to 45. And beyond 45 to 50, the sale is another picture emerges out of it. So from sale number 15 to 45, there has been increase of the price around about 50-55 rupees odd. But from sale number 45 to 50, there has been a drop in the prices. Now this is inexplicable. This is something which we cannot visualize. We cannot even predict how it has happened over there. Because there is a loss in the crop over there. The availability of tea in the market is lost over there. But why there has been a drop, from sale number 45 to 50 is something which goes beyond us, And it's quite an appreciable drop that has taken place. So if there was a rise of, say, 250 rupees was the average price, it has now slipped down to 217 rupees. A loss of 33 rupees in the last 5 sales.
All right. Mr. Bhattacharjee, also, what is kind of... Yeah.
Yeah, and if this trend continues, of course, the euphoria that was there, that will be rise in the prices, that get diminished a little bit.
And that really brings me to the question on how the tea industry really is dealing with all of this. Because as you said, one, we've seen a crop damage. Second, we haven't seen such a huge price rise as well that you would anticipate. So how's the industry dealing with it?
See, actually, the industry is a little bit, in a little bit of a soup, in the sense that how do you manage, with a crop loss of 120 million kgs? See, there has been a price rise. There is no denying the fact. Of course, it has slid down in the later stages. But what is most important is this. The volumes also give you revenue. If the volumes are not there, this cannot be compensated by whatever the increase in the price is there. This is a grim picture. Unfortunately, this is the scenario.
What is generally that we see in sense of consumption growth when it comes to India?
Manisha, we have discussed in the past also. You see, the consumption growth in this country has not been very promising. You see, if the consumption had been there, then the market would have been on fire by this time. You remember what happened in the year 2020? There was a COVID over there, the prices had gone up, But over here, we are going through a situation where there's a loss of crop, The market had risen. I mean, don't deny the fact that the market has risen, but then there is a slippage also in the price point. So this is something which is inexplicable. This is something which is very difficult to analyze or predict.
Since you are with us, Mr. Bhattacharjee, so with the way the industry is going right now, as you said, there's a production loss, the prices haven't gone much higher, consumption growth is not happening. So if there was one thing that the finance minister would give to you during the budget, what would you want?
See, from the commerce minister, I must mention over there, we had a very fruitful discussion with the Honorable Commerce Minister on 30th of November, in which, his priorities, from the commerce minister, so where the tea industry is concerned, is very clear. He says, I want a safe cup of tea. So obviously the ministry is giving more of stress on production of quality tea. And there has been in the market 60 to 70% of compliant tea that has come to the market. Now that's a huge spin-off, This gives so much of assurance to the consumers concerned. So that is one of the main, objectives of the Commerce Ministry concerned. Of course, what we can do Tea Board of the Ministry of Commerce is this, the subsidy part that was there, which has been many of the points of the subsidy to the tea industry has been taken off from the organized sector. We can always look forward and we can appeal to the Commerce Ministry whether the subsidy could be restored so that in this period of production loss, we can look to a little bit of a favorable market.
All right, Mr. Bhattacharjee, thank you so much for sparing time and joining us today on the show. Manisha, thank you for joining in as well. With that, it's a wrap on this edition of Halftime Report from Mangalam, me and the team that put this show together. Thank you so much for watching. We leave you with the Nifty at 24,950, 250 points down. The sensex down 900 points. Business Lunch takes the action forward.